Good morning, everyone. This is JJ at microefutures.com. I'm going to take you through what I call how to use balance zones to trade in 5 steps. Now, this is not, like 5-minute abs. It's going to take a while, all right? But what you need to do is first what we do is we look for balance when a market goes up and then goes sideways or comes down and goes sideways. There's a reason why it goes sideways. It consolidates and lets old business finish up before new business starts. So what we do is we look for a balance zone. After a market sells off, for example, we look for an area where we balance. And what balance is you look for a high and a low. And when you hit that high and you come down and you go underneath that low, you come back to that high, right? And if you look above that high, you eventually come back to that low, right? And then, so that's kind of one thing that's telling us that that's balance. The next thing we look at is the second test of balance. That high, right? And when it can't get up over that high, it comes right back to that low. So that's finding a balance zone and testing it. Okay, and that's the first step. All right. Then what we're going to do is we are going to double the balance range. Okay, this is step 2. So you got a balance range, right? Double it to the top, double it to the bottom. Now you'll get your upside targets and your downside targets. Okay, so when you break out of this balance, the target is the double of the balance zone. And you can see here, it worked quite nicely. It took a little time, but eventually it went right to that target and above. Okay, so what we do is we double the balance, and then this is the tough part, right? When we want to double the balance, then what we got to do is we got to watch and see if it works. Then we take a simple test trade. I like to trade using the micro when I test the market. There's no reason for me to lose money. Right? I don't need to lose $300 to know I was wrong. 30 bucks is fine. Thank you. Right? So we break out of balance. The target is the bottom of the breakout range, 4,006. I like when we look below a level and come back up over it. What I do is I initiate a long, and then I sell when we get to the middle of this part here. This is the breakout zone. This is half of it. So I'll buy the bottom and I'll sell a quarter of the way in. And then if I think the order flow is decent, I might hold a little bit for 10. But if you buy 4 at 6 and sell them at 8, 8 and a quarter, it's not bad, right? Pay your phone bill with that. This is trading for income, right? But this is a test trade where I'm using 4 micros, so I'm not looking to buy a private plane with this trade. I'm looking to test the market and see if my business idea has any merit. My business idea is this balance, right? If it has merit, then I can back that idea with capital. But there's no reason for me to back a bad or a stupid idea with all my money. Just bad business sense. So you take a simple trade based on the balance, see if it works, right? Now, if it doesn't work, right, it tells you you might have to redraw your balance zones. Then the next step, right, basically our next step is to take another test trade. Now, say when the market comes and see, we took this long here, right? Then more selling came in and took us into yet the double of this range. So it's 1, 2, 4, 8, right? That's all you're doing. So as you notice, we came to the middle of the lower breakout range, looked below, and came back up, right? So what I would do is I would take that trade again here, right? So I'd be buying 99s and under 4,000 and selling 4,002, 4,003. I always sell into strength, right? So now this confirms that our business idea is working, that balance range is working. Once we establish this, we can trade all night on this thing and sometimes into the day quite nicely, right? Then what we can do is we can use this to trade and also to understand what kind of market we're in and what we're doing with the market, right? So, for example, right, as time goes by, the zones are confirming that they're working. Once you've established this, you can trade the edges of the zones based on inventory, right? This allows you to plan setups that work because of a lack of supply or a lack of demand, and you can take trades with very specific risk, right? For example, if you're taking a short here, right, your risk is just above that level. You don't have to blow out a whole bunch of money. You got VWAP there too. So what you do is you take your short in here, you put your stop above 14. If it takes out 12 and then takes out 10, then you know that short's working and you can cover a little bit. If you're going long 6, you put your stop under the bottom of these candles here, this candle, right? There's your risk. It's defined. And then you say if you're long, say 7, right? Not everybody gets the low. So 7 or just under 8. You sell a little at 9, you sell a little at 10 into the strength, comes back down and it holds 8. You can stay in it for the next move higher. As soon as a market comes down and the next candle can't get to the bottom of the last previous one, it means the bid has moved higher and you can take that trade. This is a simple way of trading. Not many people talk about it. It's how they used to trade in the old days when all they had was a pencil and a piece of paper, right? You watch a level, and if you see when the market comes down to that level, can it trade at 4,008? No, that means there's buyers there, preventing it from getting to 4,008. You go long, right? So you can use this all the time, right? You know, uh, this tells you that we have found the bid. This is the absolute lowest price the market has gone in this period of time because the shorts have come in and started covering. That's a story for another time. This is how you trade balance. You can make decent money trading balance, and you don't have to drive yourself nuts, right? Now you can use these zones to read the market. You can see when we're accumulating, right? This is accumulation because what we're doing is we're accumulating all the trapped longs that are selling off into here, selling into wholesale hands, right? Wholesale accumulates and then distributes, right? You buy a bunch of cheap stuff, you sell it higher for as long as you can. And if buyers keep coming, you go higher. What if buyers don't keep coming? Then you sell it back down to your cost basis or wherever you paid for it and start over again. All right, folks, this has been really, really quick. This is a great way to trade with very, very measured risk, which is for a new trader who's trying to become consistent. This is the most important thing. The most important thing when you start trading is not to lose a lot of money because you don't know what you're doing. So you're going to lose money. The trick is not to lose a lot so you actually have some money to trade with when you actually figure out what you're doing. Right? There's no need to blow up accounts. Do it systematically, methodically. Have a little patience. Give yourself a break. I'm JJ. Come learn how to trade like this. Learn how to make an income with practical information at microefutures.com. We don't care what Mr. Powell had for breakfast, right? All of that stuff is great. How do we actually get the money off of this chart into your bank account? That's what we teach you how to do, right? No nonsense, practical, how to trade these markets. Keep up to it. We adapt as markets change so you can make an income. Thanks very much. I'm JJ at microefutures.com. Come check us out. We look forward to seeing you.